Good morning, you guys. It's your boy, Might from VetFX here, the Ultra Instinct Trader on YouTube. So now, I just want to make a quick video on the Nasdaq sell that we caught yesterday. I just want to make a quick breakdown. Yeah, man, I got some few people comment on Instagram and Twitter. Some even DMing me, sending me DMs, and yeah, man. So you saw the sell, the entry is there in the public channel. You can click the link on the description. That's the only trade that we took yesterday. Like I said on Twitter yesterday, that I don't trade a lot. I don't trade a lot because I know what I'm looking for. So I usually just take one trade a day or two or maybe three when I'm highly active. And I'm talking about if I'm trading one pair, right? So this reduces my chances of taking L's and it increases my win rate. So now let's get to the breakdown video on Nasdaq. So on Nasdaq, what we had was, let me just get rid of everything, right? Remove drawings, yes. So now we know that every setup, every QM has to happen at a certain time of the day. That's the most important thing. That's the most important thing for sure. So now let's start on our daily time frame, right, and see what happened on a daily time frame. So on a daily time frame, we had a market that was trading into these, right, that high here. So when we had a market that was trading in that high, remember, even the buy that I caught here, I wanted to take out the buys here, right, and see the reaction from there. So now when we take out this high, let me see, the high of this candle comes at 15833.48. So I'm going to fix that, 833.48. That's the high of this candle, right? And now we have also this here making the imbalance, which is about the low comes at 160.83, 160.83.60. Right, now that we have that, and we did notice that, okay, price, I think I did speak about this when I was explaining the buy, about I did speak about what happened here and how price tapped into this area here. So that is not important. It was also taking out the sell side liquidity below these. So now I wanted to see price go and take out the daily high buy stops, right? These are like buy stops inside the fair value gap here, this zone. So now I want to see like what happened on a smaller time frame. We go down to smaller time frames. Now we have this, right? So in a smaller time frame, we have these being created, right? So when I look at these, I was like, okay, now we were trading inside these and this happened, right? These ran the buy stops. After running the buy stops, let's look at the 1 hour. After running the buy stops, we start to get our what I view as my bearish QM. Some people just like to call them QMLs, but I just call them QMs, man. When I look at these, I see this is a buy stops, and I also this is a swing buy, and it's swing high and a swing low, and then we create a new high, and then we trade below that. We have these. So in this kind of form, when I go to my smaller time frame, the lower I go, the clearer it gets. The lower I go, the clearer it gets, right? So now when you see this on the 15 minutes, you see now on the 15 minutes it's clear. Remember on the video that I made of showing you how to trade external range liquidity, I was talking about these kind of things. So this, as you view this as a buy stops, go and watch the video that says how to trade external range liquidity on this channel. You will understand this. right? I did mention that sometimes price can create this, right? Because now on the far left you have an old high. So when price comes and takes out the buy stops, it can create this and trade off that, or come back and trade off that, right? This is still a QM. The most important thing is the run of buy side liquidity, the break of a structure. When price returns up, this now becomes your liquidity inducement. So that means this high is now liquidity inducement. We want to see price trade above that before it goes lower. That means price had to tap into this for price to drop, right? That is that. Let me show you. Let me zoom it out a bit. So now, as this is your buy stops, right? This is your buy stops. This area is your buy stops. This area right here is your buy stops. Now we see price attempting to go there, it fails, but then price eventually goes up there, and when it goes up there, it creates this QM. It doesn't even do it like that, my bad. It does it like this, because it fails to create a new low, right? Then it taps into that, and then it drops. That's how we caught the sell on Nasdaq. I was like, okay, but remember when I say that we filter that with what time of day, because now this happened in 2 separate days. When we go to our session breaks to show you, like, okay, this was like it started forming yesterday. Remember, with these things, like a setup that takes about 2 days to form is likely to ride the whole day, and a few days maybe, or the whole week. It's likely to be a swing to a weekly trade, right? That is that. So the setups that form on your 5 minutes and stuff like that, that takes about a day, it's likely to be your day trades. So in this case, we have this here, right? You have this IFC here, or you can use the order block, the IFC with an imbalance, the broke structure, and then you see this as liquidity inducement. Excuse me, I'm using my tab right now. I'm not at home. I'm not at the office. I'm not with my PC. Even the analysis that I sent in the group this morning, I'm using the tab, so you have to bear with me a bit, because we don't have the privilege of pressing those buttons that keep your line straight like we do on the PC. So right, this is how you have it. Now you have your liquidity inducement, because now you broke structure here, you broke structure there, you ran the buy side liquidity here. You ran the buy side liquidity, you broke structure here. So now you broke structure, you ran liquidity, you broke structure. Now you go to the extreme. We sold off this point. This point. You can check the link on the description and follow the link to my Telegram channel, and then you will see what we are talking about here. My free Telegram channel. That is the public Telegram channel. And then the first target objective was obviously the imbalance here, to trade into this imbalance. That was my first target objective. That's the target objective that I posted in the group, because now I have these as a reaction point. can use this high or you can use this one. This is how it looked in the group, right? This is how it looked. But what I would really want to see, I want to see price coming back into this zone here. Maybe tap into the maybe tap into my breaker here or this zone. I will just see what the market wants to do, then I will decide from there how I want to react, because now it's all about that. That's how I want to see price coming back. Then I will look for a reaction here, because now my buy that I'm still holding even today came from this zone here. I took the buy of this area here, right? So now I want to see the price reaction there, because now I'm break even and I'm also holding like partials. I all closed about 90% of my positions, just only one position that is currently running, and also this one as well. I did the same, because you know that's how I grow. That's how you grow a small account, really. That's how you grow a small account. The account that I deposited about 236. It was running about 11k. I think you saw it. Or was it 10 when you saw it? That's the very account. So now, what I want you to take away from this is the fact that in the video of external range liquidity, I did have an example that shows you that when you have something like this, what am I doing? Right? You're going to wait for the market to come above that. And then now you do what? You trade your QMs. So what I also want you to notice, because even the people in my group always ask me, like, how do you know when it's going to trade off the breaker, and how do you know when it's going to trade off the extreme, right? If it's going to trade off this point, or it's going to come back to this, what am I doing? To this point. If it's going to come back to this point. Here's a simple answer. I don't really know. I don't ever know. But what I will tell you is that I did take the sell of this breaker here the night before. One thing that I mainly focus on is time of day as well. So I prefer to take an entry when my time of day aligns, right? I did trade off this breaker here, but I won't break even because I wanted to see it take out this low, but the momentum wasn't really convincing. Then I won't break even with the thought that when it comes back and takes me out at break even, it's basically gonna go to the extreme. So that's exactly how I trade it. That's why I always tell them, like, I never know. So it's best for me to take my first entry of the breaker when I liquidate these lows and my risk my break even rules start to apply. That's when I can, like, I can go break even and close some partials, and if it comes back, I know that I'm willing to take another sell off the extreme. That's how I do it. I never know if it's gonna respect the breaker or it's gonna go to the extreme, but I trade off the breaker first. I know if I get a reaction of the breaker and it's successful, when it comes back, it's going to use my retest of the breaker as liquidity inducement. That's simple as that. That's how I do it. So yeah, man, I don't want to make this long, as I'm in a very busy place right now. So yeah, man, peace out.